It's to the front burners on Sook News TV. This is a policy discuss segment where we look at certain policies of government and their impact on the economy and even on the society. So the National Bureau of Statistics has rebased Nigeria's GDP, and they've released the rebasing report, which has indicated a lot of things. So it got Nigerians thinking, particularly when the inflation rate was released, the inflation rate for the month of January, and many saw a decline. So the question was, does it mean that inflation rate has dropped? What does the rebasing of the GDP mean exactly? To talk about this, we have Dr. Kenneth Ikenwa, who is an economic and policy expert and is a lecturer in the University of Lagos. He joins us this morning virtually. Good morning, Dr. Ken.
Morning, Blessing. It's nice to be on Sook News once again.
You're all smiles. Do you mind telling us why you're smiling?
We need to remain positive. It's not all bad news in the economy. Some good things are happening, but how well we're attaining the level of social efficiency we need to attain, well, it's up for discussion. I hope we can, put more of our irons into the fire and get things right and put more smiles on the faces of Nigerian people. And I'm certain that it doesn't hurt to spread a little joy out there.
Not at all. After a heated argument like the one we had during news analysis, I think we can just smile it away and calm things down. All right, so now that you've joined, talking about the rebasing of Nigeria's GDP. So the National Bureau of Statistics, NBS, did actually tell Nigerians that it was going to rebase the Nigerian economy, and the base year was going to be 2019. That was what the initial announcement of the NBS. But eventually, the rebasing has been done, and so that the base year was a more current year, which is the previous one, 2024. And then we saw changes in the inflation rate. Could you explain to us what rebasing of the economy actually means and what the NBS has done here?
All right, very interesting. And when I got that data and that news recently, I was a little bit flabbergasted, not knowing what the government was actually trying to communicate. But let's start with the academics before we go into the optics of the politics and also other aspects of the policy as it were. Now, when we talk about rebasing actually has to do with focusing on certain key macroeconomic indicators, which would include the gross domestic product of an economy, like the GDP, inflation rates could be rebased, the exchange rate could be rebased, the unemployment rate could be rebased, and the terms of the balance of payments and every other thing that adds up to what we need to do and what we actually do to maintain economic activities and to maintain trade relationships with other countries, and to also look at the major productive activities that we do that brings about positive shifts in our production possibility curves. So when you rebase, you factor in certain economic activities, certain productive activities, and then you probably might decide to leave out others. So when there is an attempt to rebase the economy, it's an attempt to actually look at how a particular macroeconomic indices or particular macroeconomic indicator was actually measured, take it away from the base year where it was measured, shift it forward, bring it to another measurement level so that we can have a new statistical reference to actually observe and actually explain what has been done. So what has been done in particular for now is that the major macroeconomic variable, which is inflation, which is the price index, is the major subject for discussion, and whose data has actually been put out there. But when we actually did a last rebasing of the economy for the GDP, I think that was in 2014, where we took the base year away from 2009 to 2014. But now the focus is on the price index, because everybody in Nigeria seems to be crying about the price index, seems to be crying about inflation everywhere. But what has been achieved with this new rebasing of the inflation rate is that we have moved from actually looking at measuring inflation by focusing majorly and emphatically on food inflation to actually looking at core inflation. So many other activities like housing, the surge and the rise in digital payments, transportation, new modes of transportation, new modes of entrepreneurship have all been factored in into the price movements and price shifts within the economy to now arrive at a new inflation rate, which as of 2024 could have been, was ranging between 34 to 36%, but as of January 2025 is now 24.46%.
Dr. Ken, good morning. It's nice to see you there. Just to throw your perspective on this, you've actually had talked about the rebasing of the inflation figure from 34 to 24, losing about 10%. In your view, given the informal nature of our economy, do you think that this data is accurate? And two, do you also think that given the trust deficit in the system, that many people will believe this data? And finally, how do you think this will impact the rate of lending and those who already owing some money to the bank? What effect do you think that this rebasing of the inflation rate will have?
Okay, Dr. Ross, I wish I was actually in the studio, so I'll have taken points because you are taking me to a full-fledged lecture now. So whatever point I actually miss, please draw my attention back to it. I think I want to start with the figure or with the measure of trust, the trust deficit. Well, we must begin to understand that when we're dealing with statistics and data like this, we must actually factor in the literacy level of the Nigerian public. Right now, the literacy level of Nigerian populace stands at about 55%, and which means we have a literacy level of about 40 to 45%. So there's a likelihood that when people hear data like this, they may not understand what it actually means, and that is why it's important that platforms like Soup, are actually out there to actually explain to the people what is actually obtainable. Now that the consumer price index has been rebased, that doesn't necessarily translate into the fact that prices of goods and services will actually drive down. But it is a good catalyst for us to see the new direction in which the economy is taking and the possibilities that can actually be attained. The implications for that will be, for instance, that in economics, we know that there's usually a relationship between the interest rate and the inflation rates and also the exchange rates. So if the interest rates actually go down, if the inflation rate actually goes down, it means that we're expecting there should be some strategic policy shifts from the central bank as a key regulator to ensure that the interest rates are not too further with what we call basis points away from the interest rate. So hitherto, if you have gone to the Nigerian commercial bank to borrow money, you may be borrowing money at a lending rate between 30 to 34%, which actually you see is in tandem or correlates with what was the existing inflation rate then, because the interest rate is the price that you actually pay for actually getting money from the bank. So now that we have a rebased statistic, a rebased data, it will also follow that the regulator, the central bank, will look at a way of ensuring that maybe between 1 or 2 basis points, now that we have 24% as the inflation rate, the interest rates most likely will come down. And that will mean that people can now borrow money for lesser rates. But sometimes things don't actually work with the kind of structure that is obtainable elsewhere because of the peculiarities and the particularities of the Nigerian system. But how does that actually affect people that will be looking for credit, people that are looking for loans from banks? It will mean that those who had borrowed initially at 34% will still have to maintain the agreement they had with the banks to pay at that 34%. It was expected that it will be, rebased, or it will be rescheduled, or it will be reconfigured to the existing interest rate, but that will be running at a loss, for the banks or for the creditors. So these are some of the factors. These are some of the key implications of having a rebased inflation rate and how it affects the economy. Now, with respect to trust, trust, to an extent, is not a quantitative variable. You can't actually measure it. It's a perception. When I saw that figure, I was particularly interested that we're making progress. But when you look at figures and look at data, you also want to look at what is obtainable in real economic terms. the fact that we now have a rebased consumer price index, inflation rate, does not translate to the fact that prices will actually come down, but translates to the fact that there's a possibilities that ceteris paribus, like we say in economics, all things being equal, and with the new policy shifts, and with the attempts that the government is, I believe, consciously trying to make to improve the lot of Nigerians, there's a likelihood that with more incentives coming into the economy, with lower interest rates, with manufacturers now being able to borrow or get money from banks and manufacture or produce, carry on with the economic activities with lower cost of capital, there is a likelihood that some certain prices of some certain goods, with particular reference to some sectors in the Nigerian economy, most likely are expected to go down. But here again, we need to highlight and spotlight the Nigerian factor. Do prices ever go down in Nigeria? So much more than the trust deficit, I think what we should now start looking at actually tackling collectively is the character deficit of Nigerians. If you now know that the cost at which you have obtained a particular product, a particular raw material has gone down, will you have the conscience to actually translate that to the real terms of calculating what should be your profit, what should be your cost of production, and ensuring that Nigerians benefit from this? So much more than looking at the government, we should also be looking at the character of the Nigerian people, at the character of producers, and at the character of our creditors.
Okay. Thank you very much, Dr. Ken. I think most of the areas I wanted to channel my question, you had actually glossed through it. But, rebasing the economy, they made a big deal out of it. And sometimes the common man on the street, so listening to the news, watching us on television, talking about rebasing the economy, and they seem to ask you, what is coming? Where is this taking us? And probably when you try explaining and they found out that at the end of the day, they said, these are esoteric terminologies that is meant for those people like you, Dr. Ken, who are academics, and for those who have specific knowledge to understand what that actually means. It doesn't really affect them. Now the government, the NBS has rebased the economy, inflation from about 36.48, now it is now 24, and they are looking at themselves, okay, my purchasing power as a Nigerian has not increased. Food prices have not depreciated, have not declined, not because, even when it actually declined, it's not because of the rebasing, it's because now we have excess supply coming from agricultural hubs in different parts of the country. So now that the economy has been rebased, does that affect business decisions by investors? And if it does, who stands to gain? Because it looks like a decision that was made by the government on white paper and ends on white paper. It does not have any tangible reference to the Nigerian consumer and the investor. Do you share perspective?
All right, very interesting. I like the word you use, esoteric. So our job from this side of the island, from your side, is to demystify some of this data and some of this information out there and ensure that it is well disseminated for the benefit of the Nigerian people, so that we can at least make some track of progress and not look at things as all bad, despite the fact that we're living in very austere times. Now, let me focus more on the major aspect of your submission and what you just talked about. And I think the major atom within that frame of discussion and submission is actually how does this information, how does this data actually affect investors' confidence? Because no economy can grow without what we call investment. So for an economy to move forward, the national income accounting requires that there should be, a lot of consumption in the economy, there should be a lot of investments in the economy, there should be savings, and we should earn some foreign exchange from abroad, and we should also export a lot. So we look at the national income accounting and focus on investors' confidence and ask how this data, what signals, and if I may borrow the Gen Z language, what vibes does this data, does this new rebasing of the consumer price index, what does it send out there? Now, it sends a lot of positive impression about the growth of the economy. And the data actually says that in 2024, the economy did actually grow with about 3.2% or thereabout. Okay, so with this rebasing of the consumer price index now, it means that we're working and we're running and on the hypothetical assumption that the purchasing power parity of Nigerians will actually increase. Now, let me explain that. Who is going to want to go into the manufacturing of any commodity, of any product, or importing of any product for sale when people in that particular country or particular vicinity do not have the purchasing power to actually buy those things, so that commerce and trade can continue to revolve at whatever level or whatever degree? So with the drop down in inflation, and with the opportunity for investors to come in, because there's this correlation between inflation, between the exchange rates, the inflation rate, the exchange rate, as well as the interest rate. It means that investors can bring in their money now. The exchange rate most likely may not go down immediately, but when there's that confidence, we can have more people investing into the economy, we can have more foreign direct investments, we can have more portfolio investments, foreign portfolio investments, and we can have more indigenous direct investments. You, Joseph, that can go out there to the bank, have that confidence to borrow money, have the confidence that the rate will be low, set up something, increase the unemployment rate, increase the employment rate within that vicinity, and add more value to the economy. But the caveat on that theory is this, on this theoretical postulation is this: the fact that this data has been announced does not necessarily translate into a policy change or a policy shift. The fact that this data has been announced does not immediately translate into improvements in real economic terms. Very, very importantly, so that we do not castigate the government and give a dog a bad name to actually hang it. But what this actually portends, what this actually implies, is that there are some positive movements in the economy. There are some positive movements in our production possibility curves. There are some positive movement in our macroeconomics that can now make the economy a little bit more attractive and a little bit a better place, for foreign direct investments to find their destination. So we are hoping that with this data, if there will be an accompanying series of policy shifts and policy changes that will improve liquidity in the economy, that will improve the standard of living, that will improve incentives for people to invest, for people to produce more in the economy, and that will improve the earning power of Nigerians, this will all amount to positive benefits for the Nigerian economy, and indirectly, hopefully by the end of this year or by 2026, we should be looking at about 4% to 6% of growth in our GDP.
All right, let's look at some components of the rebased reports. So the consumption basket was expanded to reflect some things that, some items that Nigerians spend on that was not captured before by the consumption basket. And also, the base year being changed from 2019, which the NBS initially chose, to 2024. What's your thought on this shift in the base year? Do you think it gives us a more accurate reflection of what the economy is? And in respect to some items that are now being introduced or added to the consumption basket, what does that make for us in terms of strategic planning?
Okay, I think I would want us to maybe fact check, maybe during the course of this conversation or perhaps after this conversation. I think that the rebasing year was actually shifted from 2009 to 2024. That's the movement along that rebasing curve. So we may want to fact check. If somebody can actually help us do that, because when I did my fact checking,
but updated to 2024.
You are correct. The last rebase was 2009, but MBS had earlier published that they were going to move it to 2019, and I think that's the point that Blessing has made.
The figures are a little bit esoteric.
Or instead of 2019 that they projected before.
Okay. If I should go back to what Blessing is actually laying emphasis on, I think if we look at it holistically, we should try to be optimistic. Going back to the smile I did have when I came on set this morning, or came on set virtually, we must come to terms with the fact that there has been some degree of growth in the Nigerian economy, and there has been changes. And we must also recognize the fact that these 2 years, 2019 down to 2024, a major transition has taken place that came with a lot of strategic policy shifts. For instance, the removal of subsidy, for instance, the removal of education subsidy to an extent, and other forms of subsidies, and other incentives that have been, put into the economy to actually ensure that there is growth in the economy and there is development. So the major issue here should not just be within the time frame or within the time, the space, the dates of the shift. It is for us to identify why was this decision taken. It was taken because new activities have come into the economy that have helped to create more employment, even though not formally, but at least informally, and that have also reduced the fact that people who hitherto could have been productively engaged to a particular occupation now have other occupations that occupy their productive time and add value to their families and add values to the economy. So I don't want to do too much damage control here. I'd rather focus on the progress that we have made. Has the economy grown? Have more businesses come up? Have we had more a spurge in entrepreneurship? Are we innovating more? Look at what we're doing with fintech, for instance. Look at the possibilities that are coming through with agriculture. And other sectors. Look at the growth in the educational sector. But how well does this translate, into other indices like, doing business in Nigeria? Other indices like economic freedom in Nigeria is another subject for us to actually consider, for discussion and for critical discourse. So amidst the fact that things are happening, where there's growth, there's productivity, there's activity, the real question at the end of the day will be, how does this create social efficiency for 80% of the Nigerian people? Has there been growth in some sectors? Are more sectors growing? Have there been a pool of investment? Are we having fintech companies, other smaller companies? Is technology, are we leveraging more technology? The fact remains yes. But how has this translated to what we call Pareto optimality for 80% of Nigerians? It's still a question that we need to address. And in my own view, if I must be candid and honest, we are not being as socially efficient as we need to be. In other words, we are not getting as much benefits, translated down to 80% of Nigerians that we need to have liberated and emancipated from poverty as quickly as we ought to. But there could be some light at the end of the tunnel, hopefully, definitely.
All right, so the second part of the question was for the consumption basket that has been expanded now to include certain items that it didn't capture before, to show what Nigerians are actually spending their money. Now, what use would that information lead to in terms of strategic planning?
All right. Like I did say, we based and look at a couple of activities, like you choose to say, call it the consumption basket, where we're actually spending our money. And every economy must be driven by production and consumption. All right. So in as much as we are producing, and we hope that we are producing internally, organically, we should be consuming so that we can facilitate trade, internal trade and economic activities within. But with respect to these new items that have been included, it helps us to also underscore and particularly understand other strategic activities and the implication of that data for macroeconomic indicators like unemployment, like economic growth, like economic development, and most importantly, how we can use this data for strategic national planning of the economy. Now, let me draw an analogy with this. For instance, if we have to be in a store, for instance, if we have 10 people actually doing something in the store, and you are only accounting for what 8 people are doing, and using that income, that cash flow of what 8 major activities within that store, 8 major businessmen within that store are actually doing to qualify the entire activities of that store, in one way or the other, you will be punished the data that is needed to actually give a holistic and qualitative evaluation of the activities within that store. So now that we have other activities, haven't come into this basket, like you said, and we use it to rebase the economy, we can plan more efficiently. Let's take, for instance, transportation. It will mean now that we're having to have more cars on the Nigerian roads. We're having to have the need to produce more fuel. We can now know the quantity of fuel that we need to produce per million of gallons every other day. And we can now plan for how well we need to also manage or maintain our road infrastructure. And we can also plan for how we we need to start strategically considering other channels of transportation beyond just our road network. So I'm happy to see that the rail networks are opening. People can now travel, I think, within Delta, within Lagos, from Lagos to Ibadan, from Lagos to Abeokuta. And I was reading of that Ishoki traveling by train to Delta State, Warri, his hometown, or thereabout. All of this data put together can help a serious-minded government, which I believe this one is, to actually plan for this growth, which hitherto were ignored, but now are major core activities that contribute to economic activities in the Nigerian economy. And that way, we can plan at least 5 years ahead for the growth and for the development indicators and implications of this expansion in activities and the benefits for Nigerians going forward.
Thank you so very much. We also have seen that in the last couple of months, especially since this new regime came in, at succeeding MPC meeting that the NPR had been raised because government has argued that it has been working, and of course is to reduce cash flow within the circulation so that it can also drive inflation down. With this rebasing, are you thinking that CBN will now reduce NPR?
Well, that is a very tight one because I dropped into your conversation about whether the naira is being traded or naira is not being traded, and we need to understand that some of these issues actually have to deal with the cultural dynamics of a particular country, and so for that purpose, sometimes it's not fair to actually compare apples, with oranges or apples with pineapples. What may be obtainable in Canada, given the cultural dynamics of Canada, may not be obtainable in Nigeria. We will continue to be a largely cash-based economy, in as much as we have made a lot of improvements and mileage in transiting from a cash-based economy to a cashless economy, and we have a lot of transactions being fueled by digital platforms, digital banks, fintechs in Nigeria as we speak. It also means that we have also expanded and improved on our financial inclusion data, which as at 2023 or as at 2020 was about 50%, but as at 2024, we can see that it has moved to about 76%, as against the target provided in the Nigerian Financial Inclusion Strategy 3.0, which is aiming to bring us to 95%. Now, the question with the NPR and the question of whether it will be reduced, I would hope that that particular rate would actually be reduced for many reasons. And but I can't actually speak because we're all victims of needing to use cash at one point in time or the other. We're all victims of needing to actually obtain cash, for small petty expenditure at one point in time or the other. But I would want to take a critical look, at the dynamics involved with the NPR, with the CRR, and with the new rebased interest rate after what follows from that announcement before I will make a strategic comment on that. But it will be impressive if we can actually drive the economy and make it more digital. But the problem with actually driving our economy and making it more digital, making it more cashless is this. Two things. What is the literacy level and what is the literacy level in the Nigerian economy? And thirdly, beyond the normal I can read, I can write, what is the digital literacy level? So I think if we are going to be driving a cashless economy, the CBN and other financial institutions should also be investing in a lot of financial literacy and a lot of digital literacy. That way we can have a balance, and that balance will definitely translate into some degree of improvement, both for the Nigerian economy and for the lives of people that basically are Nigerians.
More things before I let you go here. Number one, looking at the timing of this rebasing, and of course, you're also seeing farm produce are coming out. And of course, we know that we're a seasonal economy where people farm, and next month, from April, you're going to have dry season and prices are likely to go up. Do you see this really portending stability in the economy? And secondly, from your earlier response, that is likely not going to affect prices of things in the market. Are you not seeing that people may take this for a political manipulation to say as if the economy is working, and then that further reduces the credibility of MBS? in terms of the data supplied?
The truth be told, in as much as I want to be optimistic, I know, and like I've said in our Sook studio some time ago, that figures do not lie, but people actually could tell lies with figures. Statistics doesn't lie, but people could manipulate statistics and manipulate it for their own personal interests. I did a report just yesterday that I sent to somewhere in Nigeria. I'm not going to mention for security reasons, personal reasons, about some certain macroeconomic data, some certain macroeconomic indicators, and in particular, unemployment. And I did say, because that report is actually going to leave this country, to the United States soon, that for the most part, sometimes when we put out some of this data, they could have some political undertones. So it will not be fair for me to just, say, okay, this is good, but also not come to terms with the fact that some data sometimes are put out there to have political undertones. For instance, I was shocked when the unemployment data was rebased, and I was told that the unemployment data in Nigeria is presently 4% or 5%. There is no way I will be doing a research or having a conversation with anybody and tell anybody that the unemployment rate in Nigeria is 5%. But when you look at the factors, the economics, the dynamics of rebasing that particular macroeconomic indicator, you may, for instance, want to agree that it's actually 5%. Because people are engaged. You may not say because people don't have, white collar jobs, or people are not going to one place in the morning that is the office to work. You will not now say they are not unemployed when they're actually operating POSs, or when they're actually, going up and down, doing makeup for people, polishing nails for people, and earning a decent living and a decent wage. But we must address the issue of public trust in government statistics and the timing when such statistics should actually be put out, and the management of such statistics. So you have taken the words out of my mouth. There is nobody now that is enlightened enough to understand what the challenges are, where we were before 2023 and where we are now, who would not look at this data and thumb their nose and say, there we go again. This data cannot be trusted, and this data, even where it is making sense, may not actually translate into improvements. But it's also important that I say that with this data and with what is expected, with the shift in strategic policies, there are some segments, some sectors, some goods, some services will be positively affected by this new data. And we will see, hopefully by the second quarter, when we get in the second quarter, the prices of certain goods and certain services actually coming down. But much more than that, my worry is not even the trust deficit, whether it's on the part of the people or the government or about the government or vice versa. My real worry is the character deficit. Will the MD out there, will the entrepreneur out there, will the small businessman out there that now knows that petrol has come down to 900 or petrol has come down to 800, will they be willing to reduce the prices? Will the cab hailing companies be willing to reduce the prices of moving from Ikeja to VI now that even transportation has been brought into the fore, and policy shifts have been made to actually affect such a sector? So we should address more the character of the Nigerian people, address more the confidence of the Nigerian people, address more the trust of the Nigerian people, so that when data like this happen and when data like this are brought to the fore, we can actually have them translate into meaningful improvements in our economic trajectory and in the subject matter being discussed, the prices of goods and services.
Thank you so much, Dr. Ken. In 2008, the United States of America experienced a financial bubble, and it had a severe effect on the populace. So because of that, in 2009, there was a policy shift. The American government actually made a law, and they call it American Reinvestment Recovery Act, which actually prompted the American government to start doling out trillions of dollars to support local and domestic businesses in order to empower the purchasing power of the man on the street and also to provide employment. Now, by virtue of the Nigerian government rebasing the economy at this moment in time, do you see any policy shift coming from the administration? And from your own perspective, if it should come, to what section of the economy should that policy be directed?
All right. I hope I got your name right. You're Joseph. Joseph, I think. All right. What you described that took place in America, where we had, I think, the first major economic meltdown in America, which also had a global effect, a global spiraling effect. What the American government did to rescue some companies that went under, to rescue some banks that went under, in economic terms, we call it quantitative easing. Quantitative easing. So, and I think that in Nigeria, at some point in time, we've had policies aimed at certain sectors. I think in aviation, where we try to give, we find that a lot in banking, where the asset management company of Nigeria actually comes in to rescue a particular bank, to buy over liabilities, take over the bank and resell the bank to new investors. That is another form of quantitative easing. So, with where we are presently in the economy and with our economics and with our politics, and I hope you know too that the politics of the country definitely will affect the economics of that country. But I'm not going to go into that because we know that certain decisions are usually being made on the basis of, you know, where the pendulum is swinging in with respect to where the politics or where the party in power is and who has access to the party. But in the interest of social efficiency and for us to be able to pursue Pareto optimality, which will mean that we must take decisions that must affect and bring ease to at least 80% of Nigerian people, I think we should be looking at sectors like agriculture. We should be looking at sectors like agriculture. We should be looking at how we can provide more subsidies, how we can provide more incentives into the agricultural sector, and how we can expand, you know, agric business, as it were. So there is agriculture, and there is a need to expand agric business, and there is a need to reinvest into agriculture in such a way that we move agriculture from the traditional practices that dominates about 60% of agricultural practice in Nigeria right now, and move it to, you know, more mechanized farming, so that we can boost the yields per hectare of land and we can have more to feed the Nigerian people. One critical thing that has happened with the rebasing of the purchasing price index in Nigeria, which has seen it go down, is that we have shifted from looking at inflation from food inflation now to core inflation. But does that mean that the prices of food and services will, the prices of food, for instance, will not go up? There are a lot of factors that go into it. You know, the security factor is out there, up there in the north. The transportation factor is up there in the north. But much more than that, we need to be able to invest in that sector, so that people can have, you know, more technology, leverage more on technology, leverage more on seed technology, and have more produce to be able to feed Nigerian people and depend less on exports. And of course, I mean, I should be sent to jail this morning, at least for 24 hours, if I do not mention that there should be a lot of quantitative easing in the direction of public education sector of Nigeria, the public education sector of Nigeria. A lot of Nigerian universities right now are going through a lot, especially with meeting with the bills of having to, you know, ensure that members of the university community have enough energy to be able to carry on with the activities of teaching, of researching, and of providing hostel accommodations for their students, which are comfortable. So I would want to see a situation where the government would, you know, address more to the Nigerian public educational system across all levels, whether it's the tertiary, especially at the tertiary level, so that we can have a lot of quantitative easing in that sector, and that will translate to more research, more innovation, more quality, you know, based graduates, and expand the skill liquidity, expand market, labor market inclusiveness for our graduates, and most importantly, improve the employability of Nigerian graduates. Once we look at those two sectors, then we can begin to talk of other sectors. So for me, if you would ask me, if the president should ask me now, Kenneth, where should we direct millions of naira to ease the burden in such sectors, I would say agriculture and I would say public education. We can't go wrong with those two sectors, definitely.
Dr. Kenneth Ikenwa, who is an economic and policy expert, thank you for the brilliant submissions that you've made today on the show.